Okay, fine. So you like pain, do you? You like punishment. Fine, fine. We can talk about the market. Everything's on fire. Let's have some fun. Welcome back, ladies and gentlemen, to Argos Anonymous. I am Argos. Some of you may be thinking, Argos, you used to put out market videos all the time. You gave these little updates. You said, hey, the price is 400, that's too low, I think it's going to 1,000 or whatever. And then it would hit that or whatever, and then you'd be like, oh, it's too high, it's going to. You used to do all this stuff, and now you don't. You just open things and hit things with swords and knock things around. Like, what's going on? But the truth is, I do still provide this kind of financial analysis and just my opinions on things. I've migrated most of it from YouTube over to my market analysis tier in my Patreon, and something that we just talk about privately in our private Patreon Discord. So it's still there. It's still circling around all the time. It's just between that and the online sales and the MetaZoo events and the MetaZoo this and the MetaZoo that, there hasn't been as much time. I've had to pick and choose. And so that's why you don't see as much market analysis updates on YouTube anymore, is because it's gone largely private. And if I have 5 minutes, I don't have a choice. I have to prioritize the patrons before putting it out to all of you fine people's MetaZoo. It's not that I don't care. It's that I'm but one man, and I only have so much time. So this video is to catch you up on some of the stuff we've been talking about in the Patreon for the last couple of months, and the things that we're seeing right now in this insane marketplace. I just want to say before I dive too deep here that most of the topics that I'm going to address today are regarding the broad financial market, stock markets, bonds, real estate, all kinds of other stuff, and not specifically like the cost of a MetaZoo Kickstarter box. So most of my statements are directed towards that. MetaZoo in and of itself, despite the background of probably, of a recession, all this sort of stuff that's going on, MetaZoo is doing very, very well. It's still growing. Products are selling out. Quality is building. The company itself is expanding into all these other areas. There's more partnerships, all kinds of stuff. MetaZoo is doing fine. The only thing is that all of these other issues that we're going to talk about, it directly impacts MetaZoo. It impacts the financial market, secondary market, and that makes people feel a certain way, because when you see something go up value-wise, quality is assumed. You don't have to ask any questions, because if the price is going up, then you just know everything must be good because the price is going up. And similarly, when the price of something is going down, negativity is assumed. A lot of people will just see it going down and they're like, negative, because the price is going down. It is what it is. And that's why in a sense, managing your financial market as a card game is important, because it really matters, because it's the easiest cursory glance that anyone can give your game is popularity based on value. And so people will always look at these lower printed, rarer things at maintaining value, and they'll make assumptions based on that, and therefore they are important, really. And so that's why we're talking about this. And I just wanted, though, to draw that distinction between actual game performance in the company and the performance of some of the higher value items in this case. Because a mistake would be to see the value of items in high-end items in MetaZoo dropping and think that in this case it correlates with the decreased popularity of the game, because we have seen increased volumes of sales in MetaZoo. They're selling more all the time than they ever did before. That's not something that happens with a game in decline. MetaZoo is growing. MetaZoo is expanding. So the way to approach this, in my opinion, after everything we talk about here and with some future updates or whatnot, is to look for opportunity. Wait for the right time to find opportunity. As long as the growth rate continues and the game keeps expanding, that's great. This is an opportunity, as opposed to a time to go dump your underwear out on the lawn prematurely. On the topic of predictions, some people say that nobody can predict what's going to happen next, and I would just say that no one can tell for sure what's going to happen next, but let's come on, like, let's be honest here. A weather person can say there's a 70% chance of something happening, and it might not be true, but they are making an educated prediction. Hopefully they are. Benefit of the doubt. They are using their science and experience and all that kind of stuff. They're making an educated prediction, and more often than not, it will come true. And that is the best anyone can hope for. And the way the market works is sometimes you're able, just like the weather, sometimes you're able to make relatively accurate predictions, and sometimes you're not. And last summer and fall, when we were bouncing around back and forth in this really predictable manner, it was because there was nothing else at play. There's nothing else going on. A lot of people weren't working. The government's like just handing everybody cash. There's no fundamental issues. MetaZoo's just zoom, zoom, zoom. It's still in that up phase, that manic hyper right out of the gate phase. And so all you had to look at was the technical analysis of fundamental market dynamics of, after a certain amount of profit, people tend to sell off, and you could just watch it kind of go up a ways and taper, and then you just knew that if it can't go up, it has to go back down because it's gone up so much in such a short period of time on such low volume. Sometimes you know where things are most likely going to go, and sometimes you don't. And last summer and fall, there weren't a lot of confounding factors at play. The economy was being super pumped up by the Fed, so everyone had blinders on. There's free money everywhere. Everyone's stuck because of the pandemic. They can't do a lot of stuff. They have all this money. They have all this time. And so the only thing that really mattered back then were just basic fundamental market dynamics, such as buying and trading volume and price acceleration. So you just look at when does something start to kind of top out? And then if the volume dries up, you don't see many sales or many purchases, then it has to come back down. And you could just kind of play that game and bounce the price back and forth for quite a while. But things are different now. In the Patreon, we've been talking about since last January how the market has changed, how this is no longer a bull market in anything. This is obviously a bear market. All these other YouTubers have been talking about this now. By now, everyone's kind of caught on to the fact that things are different. And what I wanted to get across today, the opinion that I wanted to share, is that I think when you listen to other people sharing their opinion, you want to be careful because so many people latch onto so much random stuff, and they use that to explain what's happening. And it may sound like it makes sense, but at least in my experience, it very rarely actually matters. Like, you can say the war in Russia matters, right? But then a bunch of other people will be like, well, other people have had a ton of wars during bull markets before in the United States, didn't matter. And then someone will say, well, the price of oil and energy went up this time. And you're like, well, BS, like, it's been way higher in the past, and that didn't do it back then. Like, why is it different now? And there are a lot of complicated things going on in the world and going on in the economy, that have an impact in certain places. But in my opinion, it's not that complicated. The way that the market works now is what's called modern monetary theory. And what that is, the TLDR version of that is that the Federal Reserve just kind of like pumps things up when it wants the bleeding to stop, or when it can, when it's able to do that, and then it doesn't when it can't. And so what's happening now is very simple. You can say it's pandemic, and sure, there's some issues there, and you can say it's Russia, you can say it's bubbles and all this stuff, but really, what's really happening with financial markets, in my opinion, in my non-expert, not financial advice opinion, is the Federal Reserve has to raise interest rates because of inflation, because their primary mandate, one of two, is to not allow inflation to go too high. And inflation's going nuts. And so how they can curb inflation is they suck money out of the market. And so the Federal Reserve is sucking money out of the market. What do you think is going to happen to the markets when the Fed, the biggest bank, essentially, is sucking money out of it? They're gonna go down. Like, you don't need a reason. They're gonna go down. And what you've seen in the past is that anytime the Fed, even when nothing is going wrong in the world, anytime the Fed comes out and says, hey, we're thinking about maybe sucking a little money out, the stock market's like, like they call it a taper tantrum, right? It's the tapering of all this federal stimulus in the absence of any problem has caused the market to stumble. So do you think that right now, when you actually have a lot of problems going on, that the Fed talking about sucking money out of the system is going to drain financial markets? Yes, and nothing is safe because fear and uncertainty spreads like wildfire. There's nothing you can do. So the way we apply this to MetaZoo is essentially a growth sector. So when we look at MetaZoo, what we want to do is understand that in this current climate of the Fed raising the rates, sucking money out of the system, all these financial bubbles deflating intentionally, all of this stuff happening to reduce inflation in the country, with that in the background, nothing MetaZoo that is not a short-term moon, like a product that was short printed or something, nothing is going to go back the way it was until that is fixed. Kickstarter boxes cannot go back to 10K, in the current climate. They can't. First edition boxes can't go back to 1,000 right away in the current climate. And I got to tell you, the Federal Reserve is not talking about turning around right now. I saw some YouTubers recently saying, this is it. This is the end. But what do you think is going to happen a month from now when the Fed raises interest rates again? And then a month after that, if they raise it again, and the stock market is going down and all these bubbles are deflating, you think that's not going to have an impact on your collectible card game? Of course it's going to have an impact on your collectible card game. It doesn't even matter what the card game is doing, although, I mean, that matters in a different sense. But even if it is doing well, even if it is making the right moves, you're sucking money out of the system everywhere. And there's going to be contagion. And we need to wait. In my opinion, and what I've said to patrons, and who knows, right? In my opinion, instead of looking at the Russia war and the cost of gas and like voodoo pixies and little clay pigs full of whatever you put inside those when you're traveling from like Central America to the United States, whatever's going on over there, instead of looking at all that garbage, just watch the Fed. Because in the modern market, with modern monetary theory, none of this like old school, the zombie companies have to die so the strong can survive, purge the weak kind of thing. No. In modern monetary theory, the only thing that will stop the bleeding is the Fed. And once they come in and say, I think things are looking better, I think we're gonna hold back on rate raising for a while, then you have a chance. Then markets could stabilize. And if people start seeing their retirement accounts stabilizing, their investment accounts stabilizing, some of those big money people, the kind of people that might buy a $10,000 Kickstarter box, well, then maybe you've got a chance of the price coming back up. And until then, you've got to hang on. And we're looking for a bottom. We're going to keep an eye out for a bottom, but we're not expecting any huge gains in anything until the underlying issue is fixed, which is we are currently actively, intentionally deflating bubbles and deflating markets to stop inflation. And that's it. Now, can we look at how long this is going to last? The truth is, in the past, we've seen things go on for a couple of years. It can take years to deflate. But at any time, essentially, the Fed could come in and just be like, we're going to lower the rate and start buying bonds, and we're going to directly buy the stock market. We're going to pump everything back up. They at any time they can stop the bleeding, and it's just up to them. It's up to them, And so in the past, I mean, they might run it 2 years to let some zombie companies collapse, to let some debt bubbles blow up. They might do that, or I don't know. They might look at everything and decide not to. Like, we don't know how long it's going to be. As far as the extent of the decline, I know some people have recently said, "Oh, the market's already down quite a bit." Yeah. No, they're not. If you look historically at the degree of a recession required to crash a market, you would be shocked perhaps to realize that the depth of the depression does not correlate very well with the percentile loss in financial markets. So if you look over the last, 80 some odd years, okay, and if you're expecting that a severe recession causes a severe decline in markets, you're wrong. I mean, it causes a decline in markets, yeah. But what matters the most is how, on a relative basis, how bubbled the markets are, which is obvious once you think of it that way. What matters the most is how high up we were when the problem happened. And if you are sky high in all of your valuations and there's bubbles all over town, which is where we were and probably still are in a lot of areas, you only need a recession of like negative zero point 0.1 or negative zero point 0.2 and you can shave 60% off your retirement portfolio. It doesn't take very much. So don't think that just because the GDP was -1, negative zero point 0.1, I know if you've been into that, if you've been watching that, don't think that that means that there's going to be a minor correction in stocks. We don't know. The last couple of times we had very mild recessions like that, we took severe chunks off the stock market because we started at very highly elevated levels, which is where we've been recently. So if those financial why do we care about this? Because of cardboard. If those financial markets drain, the whales that have assets in those areas buy fewer fundsy investments and alternate investments like cards. That's it. That's how this works. Most of my investments are actually not traditional like that. I use an AI algorithm that a couple of guys, my brother and I, have been working on, that we developed over the last like 6 or so years, that has back tested about 80 years of volatility, and it longs and shorts or buys and sells the stock market just when certain patterns are triggered, and it just goes back and forth and back and forth and back and forth and just generates sort of progressive return. It's not insane, but it can write it down and it can write it up. It doesn't care. And so for me, I just kind of watch these things happen, and my whole job for an investment standpoint is recognizing patterns and riding the waves. It's not about knowing how high it's going to go or how low it's going to go or exactly when it's going to happen. That's not what I do from an investment standpoint. All I do is recognize the pattern of a direction change. That's it. And so all I can contribute to this discussion, really, other than explaining everything we already talked about, what I contribute is that when I think there's a chance, a reasonable chance, that there's a meaningful direction change, which is what I did last summer and fall, right? That's all I did. I came on YouTube and said, we're here, direction change, we're going down. And it did. Not all, more often than not. And then over here, that's all I do. I don't know, direction change, So what I'll do is I'll watch and I'll try to keep an eye on it. And when it happens, when it's happening, I will share that opinion. And if I'm wrong, sorry in advance. Don't take any advice from me. Don't take any actions based on anything I say. I'm not even a real person. I'm a cryptid. I'm a figment of your imagination. But just understand that there are bigger things at play than, what one or two or three people think, what they think is driving the market, what one game is doing, all of that. There are these larger issues of just needing financial markets to go a certain way right now. And where the Federal Reserve needs it to go right now is down. They need it to go down to combat inflation. They need some zombie companies to die to get rid of jobs. There's too many jobs. Every single place is hiring. They're competing for workers. Salaries are going up, which means costs are going up. It's getting dumped onto the corporations. The corporations are then turning around and spinning it back into, their increased cost of labor goes back into prices, which then reflects itself in the marketplace. And this pattern is happening everywhere. They have to crack it down. So until they take their foot off the neck, we're kind of stuck. Now, what is the caveat? How could MetaZoo then pull itself past this background issue, this problem that's going on everywhere? And I would say, well, okay, as a high growth item with, initially these print runners of these cards, these print runs are low. MetaZoo's new. They're doing a bunch of advertising. It's catching on. They're pushing international, etc. You could have a situation where in MetaZoo, if the growth rate is high enough, and then the amount of new people coming into MetaZoo are enough, then you could stop the bleeding sooner and start to turn around sooner than other things that don't have that growth rate. That's just how it is. And a lot of little stocks will be the same way. If you have a stock that is a good stock, it's a good company, it's got growth rate, it's been getting nailed, it's been getting annihilated also over the last, few months, whatever. But those are one of the first ones to turn around. Once everything looks good, which is actually I have I have an index of stocks like that I use as indicators for when we're having like a direction change, unrelated to cardboard, and I watch those specifically to see when those when I call them like the mini blue chips, when they start to turn, right, then to me that is a helpful indicator as to when maybe some other things are going to start to turn. So I don't know. MetaZoo could do that if the growth rate continues. We'll just kind of keep an eye on it. Most of this information, if something changes, it'll probably hit Patreon first, just because it's so much easier for me to type it into a Patreon notice or talk about in the Discord than it is to make a video about it. But I'll do my best to get out here and just share my opinions, so that who knows, maybe some random thing I said today resonates with someone. If you have any questions, put it in the comments, and if you have a counter argument, share it in the comments. I would love to hear what you have to think, what you have to say about all this stuff that's going on, because there is no shortage of stuff happening in all the financial markets and all the card games all over the world over the past several months. And that's all I've got for now. Thank you, MetaFam, and fantastic members of the Metaverse, for stopping by. This is Argos, signing out.